What's going on, everybody? In this video, I'll be talking about how the current futures platform space has changed the small account narrative. If you're not sure what I mean by that, or how that even affects your account if you have a small account, stick around and let's break it down and you'll know what I mean. So let's get started. Okay, everybody. So now let's go ahead and talk about what the old narrative used to be if you had a small account. So let's just say you had a $500 account. People will go, or traders will go out and put that $500. Sorry, they'd have $500 in a savings account. They have put it into an options account and then trade options, right? Because you could buy a call or put or do a spread or whatever for a low amount of risk, looking for a percentage return. However, you no longer have to worry about that if you have a prop firm because you can now limit your risk. And I'll explain that a little bit more. But in the past, it was you have a small account, you trade options, and you look to compound it and grow it over time, right? Until ultimately you have a large account and then you can become a full time trader. But you don't have to worry about that anymore. So that's how it used to be. So let's go ahead and dive into this first slide here. I put this 5 points that I believe that prop firms are changing the small account narrative in terms of the futures prop space. And the reason why I keep saying the futures prop space, I've actually been a prop firm trader since 2016. I started off in an options firm actually, and have a transition to futures and been doing it since then. And it wasn't as easy as it is now. In fact, it was way different when I got into prop firm trading a long time ago. Now it's as easy as you sign up, you spend $50, and boom, you're good to go. Right? It wasn't quite that way in the past, but now it's a heck of a lot easier. So I wrote down 5 steps that I think, or takeaways, if you will, on how I think they are changing the small account narrative, right? So first thing is first is obviously if you get into a prop firm space, you get access to large capital, right? Traditionally, you would grow a small $1,000, $5,000 account, and it'd take you so long to grow it, particularly people who are doing over options. It'd take a very long time to get to a large enough account to where you actually make a living off of it, right? Because I believe ultimately in the end, everyone is just trying to make it to where they could live life on their own terms, meaning they do their day trade or whatever, or trade however they're going to trade, and then be able to do whatever they want and have the money to do so, right? That's, I believe, the ultimate goal that everyone, especially if you're watching this video, that's exactly what you're doing. You're looking for a means to have the money and time to do whatever you want, the freedom, right? Well, prop firms give you that opportunity to get to large capital. And then, just like it says here, prop firms flip this by offering, you get anywhere from a 500K, I seen some down to a $25,000 account. And then I know Apex has $300,000 accounts and so on and so forth. And you could get started with as little as only, we'll say $50, depending on the cells. I've seen some down to $18. But the point is the risk is literally anywhere from 18 to, we'll call it $200 or whatever, depending on your account size and whom you're doing it with. Well, so you get to trade the firm's capital. You get to keep up roughly 90% of your total gains based off of, depending on what firm you go to and where you're at in your payout structure. But basically, you get to keep 90% of your profit from this large capital, right? And 10% goes to the firm. So that's something that you actually get to take advantage of. And also, it levels the playing field, just like any trader could get access to large amount of capital using these firms. So if you take a little bit of cash and then you could use it or use it to leverage yourself into these larger accounts. And one thing I really want to talk about too is I talk about this often is, let me get my little pen here, and let's just go ahead and say, just like I mentioned earlier, let's just say you have $500. And in the past, people go and put it in I'll put OA for options account and look to trade it over time to eventually maybe get it to 100K where they feel that that is supposed to be 100K and that does not look like it at all. Get to 100K. And it means to, like I said, live life on their own terms. However, um, you no longer have to do this. So what I tell some, or I suggest to some people, I was like, well, hold on, why don't you, if you have the skills, you know, keep this $500, go ahead and put it like in a bank account, right? And take, we'll just say $50. Once you have a trading strategy and whatnot, so you have proved you could be consistently profitable, then after that, purchase just one little eval account or wherever you want to do it. Like just buy one account. And then so now you still have $450 at least, they're locked and ready to go, right? And just trade that one account. And then if that one account, and this is your typical like 50K account, and at that point, if you do get a payout, roughly you'll get about 2K. And once you get to a payout spot. And so you took $50 and flipped it into 2000, and now that small account is now $2,450. And at that point, you could buy more and you just compound it, right? You see what I'm doing there? That's you no longer have to have you don't no longer have to have all of your small amount of money tied up or put at risk. You can now take a small portion of that and use that to grow your small account. So let's go ahead and continue for. So hopefully that makes sense. If none of this makes sense, please feel free to ask questions. I come back. I obviously answer all of my questions that pop in the comment section, and share this with anybody that you think this may help. If you know someone has a small account, they're like, "Oh, this is something we should do." Share it with them. I think this is something everyone should be taking advantage of, in my opinion. So next is all right. So it speeds up the path to being a full time trader. So instead of spending years or decades, ups and downs of growing your little $500 or $1,000 account to hopefully, we'll say in 20 years, you could do it full time on your own. This is literally a straight path to where you can become a full time trader in a very short amount of time. Apex, there's a few traders there where they get the 20 accounts and then over 3 months become millionaires. It's possible. It won't be easy, but it's possible. And anyone could do it as long as you have the skills, you're established, you have good emotional control, all the typical trading stuff. I'm just saying that it's possible to get to a full-time trading level status, I guess is what I should say, quickly using prop firms. And just like it says here, that gets there quickly. You can go from having a $500 account to now you have a funded 50K account, and then you just grow it from there. And just like it says here, years of grinding your small personal account, just like I kind of just said there, accelerate entry, passive valuation. You trade large capital within a few days, and then you're hooking and jabbing and trying to get those payouts. Right. Ultimately, what matters is how much do you get on the payout. And then it really does focus your shift on execution and consistency and not account size. And like, what exactly does that mean? Well, whenever a lot of these firms, well, actually all the firms have strict risk, excuse me, strict risk management rules. Say that really fast, and I'm tongue tied. So with those rules, to get a payout, those risk management rules, I won't say allow you, but they help you be more disciplined because ultimately you want to get that payout, right? So they help you worry about just executing correctly, following the rules, and getting your payout instead of worrying about, oh, I have to get this small account to a larger size and things like that to where you can trade full time all by yourself. So it really just does shift the focus just to your process. And you always see everyone on the trading space talk about it needs to be process driven. This allows you to focus on the process and not the account size because the account size is really just a few clicks away. And then you have that situation taken control of. All you need to do is make sure you're consistent and you're following your process. And this helps fortify that. And it makes the trading professional trading desk, and they provide the capitals. Just like whenever I personally didn't do it, but whenever I started trading at the prop firm as an options trader, I they just started doing the remote side of things. And but beforehand, there was traders there that would have to go into the trading desk and trade in an extra brick and mortar type of place, right? And but it does mimic going to a trading desk because you have to bring the skills, they give you the capital, and you just keep on getting your payouts, and then you don't have all your risk tied up, right? So, like it says, just speeds up your path to being a full time trader, and then makes making risk smarter, not larger. So, what exactly does that mean? So, a lot of the firms have defined drawdown limits that protect from catastrophic losses, obviously, right? And with the small account, one bad trade could really mean that you blow all your account. Like if we use that $500 account example, um, a few bad trades, say you're risking $100, $200 or whatever it is, you're really like leveraging, putting all your capital into work. If you're using this $500 account example, then a few bad trades could really blow the account, and you don't want that. So this really does define your risk, and which is really, if you're unaware, your risk is literally just a debit paid. What I mean, like debit paid, since I'm using options, I use that term, but it's what you pay for the evaluation. So in this example that I've been talking about, like if you were buy a 50K account, you pay $50. They say you blow the account, all you can lose is that $50. It's not even a real trading account anyways. It's just gonna be all you're gonna lose is $50. That's it. So you don't have to worry about these huge losses happening to your small account. And then the simulators and the evaluations and stuff like that allow you to develop your process if you currently don't have one. And they really do help you build your discipline. And it really stakes out, like it says, rest of your personal savings. Like I've been talking about this whole time, anyways, is it really helps you build that discipline without risking all of your cash. Because if all your cash is up at risk, emotionally, you're not going to trade well. So like something for me is so whenever I first started becoming a full time day trader, it was a day trader. I used to day trade stocks. This was in 2017, I believe, and my first 3 months were a little bit rough because at that point it was like my only income that I have is now from trading, and then having that money on risk, and that's what I'm using to support my family meant that my emotions weren't as controlled as they should have been. And so I did end up getting stopped out early. Like I have the right setup, the right direction, everything right. And my stop would be too tight because I started to emotionally trade. And it was something I think I didn't realize whenever I went to full-time trading. Um, but then once I developed and had we'll say a buffer by having a savings account where I could actually supplement it, it allowed me to trade more controlled. So, like, how does that tie into this? Well, you don't have all your accounts or all of your capital tied up because it's in your bank account, right? It's kind of the same thing. You can now have your savings account to pay yourself instead of having it in your personal account. That's going to go ahead and potentially be at risk for you, right? So, like I said, that is something I think really helps you make better decisions and minimize your risk. All right, repeatability and scaling. All right, so there is such a huge opportunity when it comes to scaling. All right, so I'm going to jump to the scaling part because, okay, so I've been using one account as an example. All right, there are a million and one different firms out there. I'm drawing the screen now. So, like, there is so we'll just say Apex gives you 20 accounts, Tradify gives you 5, TopStep gives you 5. There's now Top One Features gives you 5. I think Fund Index gives you 3. Um, Take Profit Trader gives you 5. So the point is you can see that you can have all these accounts, right? And now there's trade copiers where you just click the button once and it goes to all your firms. Like you can completely scale it. Something that was told to me by actually the one of my mentors whenever I worked at the options firm is, you know, size or your profits don't really matter. All that really matters is once you get bigger, and you have a process, it's just how many times you can click the buy or sell button. So in this case, once you have a process and you hit this buy or sell button, like you're just gonna have say you have a process and you have a lot of accounts, and then you just keep on, it gets really leveraged to all of them, then your profits just get bigger. It's the same process over and over. And when it comes to scalability, it can get as huge as you want. There are so many firms out there. And if you have a solid process, all you do is keep adding firms under your account and you just keep on growing and growing and growing. And then before you know it, you're like, I don't know, like making 100K days and things like that, which is, I imagine many people would like to do. I mean, I would like to, I've never had a 100K day, but I certainly would like to have one. And just by keep adding to your process, or not to your process, but to your account size is how you can really leverage yourself once you have it processed down. And like I said, it's a compound across multiple accounts, like it says there. You can scale, and then it's just you could just like I said, repeatability. You just do it over and over, and you keep adding to your accounts or adding accounts under your name or whatever you want to call it. And there's trade copiers. You just click it once and it disperses to all the accounts. I think you get the point. Kind of feel like I'm talking in a circle there, but you could, if you have a process, you just keep adding accounts, and it will get spread out there. Also, if you're unaware of where accounts are, if you use code ACT, which is ACT, at currently at Apex or Tradeify or Top One Futures, you could use that to get the best code. That does give me a little kickback. It's obvious. Some people try to hide it. So if you're finding this video helpful and you're going to buy any valuation anyways, go ahead and just use my code. It's just a little kickback. I'll get like $5 for it. And then, kind of shows that, hey, people are actually caring what I'm having to say. So there's that. And the last one, all right. It shifts the focus from luck to process. And I think you get the point here. So we've talked about how I'll say this for the conclusion part when we talk about it. So let's just sit back. Shifts the focus from luck to process and enforce risk parameters and helps you develop great habits. It really helps you use trading as a profession, using data and journaling, ongoing optimization, and over time, this creates a foundation for sustainable and success as a trading career. And it really helps you treat trading as a business. It's how I do it. I purchase these evaluations. I do use them as tax write-offs. I obviously plan, review, and just like any other person that has a or business owner has a business, you look to grow it, and that's how you add more firms to your we'll call your portfolio or whatever. And then you really want to you always check your risk reward. What's your win rate? Like how is everything playing out for you? And you want to grow your business, just like any business owner, right? And it really does produce a long-term mindset instead of like worrying about these quick wins and things like that. It just really helps you think big picture. Okay, how much can I make in a year? Which means you could support your family or do whatever you want to do in that case. So as you can see, like in conclusion, I think these prop firms are changing the small account narrative by minimizing your risk, by only losing what you're going to pay. Like I said, say you had like $500, you just put that $500 in your bank account, take $50 of it if you have already a process developed, and try to flip out 2 grand out of that one account, and now your account just went from 500 to 2,450, right? So you can see how it could really compound from there. So it mitigates risk, is how I'm going to say that. From there, it also helps you develop a strong process based off of the rules. Because if you don't follow the rules, you're not going to get a payout. So it's something that we use in the military called instant feedback training. In terms of like when we use sim rounds and stuff where they hit you, you would know you got hit. It's not like laser tag where it just like shakes or something or just makes a sound. It's like instant feedback. So if you make a bad decision, you're going to instant feedback by not getting a payout. So you're going to learn because and not to go to another military thing is like pain retains, right? You're going to feel the pain of not being able to get that payout. You're going to be frustrated with yourself. So when it comes time to do it again, you're going to remember it, right? So that is one way to help you. I won't say help you, but is how I think prop firms can help you become a better trader. So, like I said, mitigates risk. You helps you define your process and keep you disciplined is a way to go. It also doesn't keep all your cash tied up. I didn't mention that in here, but something I talk about too is like so. And say let's just say you are actually say you don't have a small account, but let's say you have like you're wealthy. Let's just say you have $200,000. Instead of having $200,000 tied up in a savings account or sorry in a trading account, I'd rather have that money working for me somewhere else, like in real estate or whatever business venture you wish to do. However, it's just not tied up in a trading account. You actually are just trading for a firm, and so you have now different income revenue stream from that capital working somewhere else, and you can still trade. So now you have two instead of one. See how you could really spread it out that way. And then also, like I said, it really does help you trade as a business as well. So, anyways, I think that pretty much covers it. If you have any questions or any of this didn't make sense, please throw the questions down in the comment section. I'd love to get back to them and help you out. If you're new here, like, subscribe. Y'all guys know all the cool things to do on YouTube. And like I said, also, if you're looking to purchase any valuation at Apex Funding or at Tradeify or at Top One Features, use code ACT and get the best discounts you can. And now, obviously, get a little bit of kickback, just a little way. You're saying you found this video helpful, and also, yeah, I guess that's pretty much it. But y'all have a fantastic day, and see you in the next video.